Welcome to today's episode of the Deep Dive Credit Podcast, presented by Elite Credit Solutions. We are your trusted partner in affordable credit repair, proudly based in Tampa, Florida, and dedicated to serving clients across the entire United States. Join us as we explore the intricacies of credit management, share expert insights, and empower you with the knowledge you need to achieve your financial goals. Get ready for an enlightening journey into the world of credit. Let's dive in.
Ever wonder how long things actually stay on your credit report? It's a question we get a lot, and the answer might surprise you.
It really is kind of like a financial time capsule, and knowing what's in there is, well, it's crucial for a good credit history.
Exactly. So we are diving deep into this today. We've got articles from all the major players, TransUnion, Equifax, and Experian. Plus, we've got some insights from Bankrate and even the Consumer Financial Protection Bureau. We're going to break it all down. How long different things, good and bad, stay on your report, what it means for your, financial health.
Think of us as like your credit report decoders.
I like that. And okay, here's a little something to get you thinking. Did you know that paid medical collections aren't even on credit reports anymore? More on that later, but it's a big deal for lots of people.
Yeah, it's true. It's one of the ways that credit reporting has gotten better for people lately.
Okay, let's unpack this credit report mystery, starting with the not-so-fun stuff. Negative information, late payments, collections, those kinds of things. All of our sources say these generally stay on your report for 7 years.
Right, but it's important to remember that how much they matter goes down over time, especially if you're, working on your credit. It's not forever.
Oh, that's good. It's like a fading bruise, huh? It's there, but less noticeable.
Exactly. And speaking of time, bankruptcies, these are the ones that really stick around. Chapter 7 bankruptcies, where your debts are basically wiped clean, those stay for 10 years from when you file. Chapter 13, where you make a plan to repay some, those are a little shorter, 7 years.
So there's a plus there if you can do Chapter 13. But hey, let's move on to some good news. Remember that thing I mentioned? Paid medical collections are officially off credit reports.
This was a huge win. Came into effect back in July 2022. TransUnion and Bankrate both say it was a really positive step.
Yep, before this, paid medical collections could stay for 7 years, even after you paid. Can you believe that?
It really shows why it's important to, keep up with credit reporting changes. Things change. What was true a few years ago might not be true now.
That's true.
Yeah.
Okay, things get a bit tricky with collection accounts. Even if you pay one off, it can still stay on your report for up to 7 years from the original, delinquency date.
This is where I think a lot of people get confused. They think paying it off makes it go away, but it doesn't always.
Like a shadow that sticks around even after you take care of the debt.
Exactly. And even though how much it affects your score goes down, it's a reminder that the best thing is to just avoid collections.
Okay, so how do we make our credit reports look good?
Let's talk about closed accounts that were in good standing. This is interesting.
I'm listening.
So TransUnion, Equifax, and Experian all agree. Those closed accounts, the ones you always paid on time, they can actually help your credit score. They can stay on your report for up to 10 years, showing you're responsible.
Wait, so even after I close a card, it's still helping me?
Yeah. It's like a secret credit booster. Think about your oldest card. It might still be helping you.
Wow. I never knew that. So it's like you're building a credit legacy.
You could say that. It shows good credit takes time, and that doing the right thing can have a lasting impact.
I'm seeing credit reports in a whole new way now. It's not just about avoiding mistakes. It's about, building positive history.
Now, let's talk about inquiries. Those little pings when you apply for a credit card, loan, pretty much anything.
Yeah, those make me nervous.
Okay, let's break it down. There are hard inquiries and soft inquiries. Hard inquiries are when you formally apply for credit. They stay for 2 years, but they only affect your score for 1.
So they're not permanent.
Right. Now, soft inquiries are different. These are things like pre-approvals, background checks, when you check your own score.
Those are the good ones, right?
Exactly. They don't affect your score at all.
That's good to hear. But I remember reading that applying for too many cards at once can be bad. Is that true?
Yeah, it is. Multiple hard inquiries in a short time. That can be a red flag for lenders.
Like you're on a credit card shopping spree, huh? Not a good look.
Exactly. It can make lenders think you're desperate for credit or taking on too much debt.
Yeah, that makes sense. But what about when you're shopping for a mortgage or a car loan? You might have to apply at a few places to get the best rate.
Good point, and there's an exception for that. Most credit scoring models treat those multiple inquiries, within a short time as just one.
So the system is kind of smart. It can tell you're just trying to get the best deal.
Right. It's all about context.
So we talked about negative stuff, bankruptcies, collections, closed accounts, and inquiries. Anything else we should know about how long things stay on credit reports?
There are a few things. For example, Experian points out that having a high balance on your credit card compared to your credit limit can hurt your score.
So even if I pay on time, maxing out my card isn't good.
Exactly. It's about something called your credit utilization ratio, which is basically how much of your available credit you're using.
So lower is better.
Right. The rule is to keep it below 30%. So if you have a $10,000 limit, try to keep your balance under $3,000.
Got it. So my credit limit isn't on my report, but it affects my score through that utilization ratio.
Exactly. It's like everything is connected with credit cards.
And unlike negative stuff that has a set time limit, my credit card balance updates every month. So if I pay down a big chunk of my debt, my score could go up quickly.
Right. Once your card issuer reports that lower balance, your utilization goes down and your score might go up.
That's encouraging. So we can do things to improve our score right now, not just wait for old stuff to go away.
It shows that credit scores are always changing. They react to what we do with our finances.
Speaking of behavior, TransUnion mentioned adverse information. What did that mean?
It's basically anything a lender might see as bad. Late payments, collections, charge-offs, even high credit card balances.
Anything that makes them go, maybe not.
Exactly. They're looking at how risky you are based on what you've done.
TransUnion also said things are a bit different in New York. They said paid collections in New York fall off after 5 years, not 7, like most other states.
That's right. Credit reporting laws can be different in different states. It's good to know the rules for where you live.
Like different states have different credit report languages.
That's a good way to put it. It shows that credit reporting isn't the same everywhere. There are little differences depending on where you live.
Wow, it really is amazing how much information is in these credit reports. Like it's like a financial fingerprint. Tells a whole story about how we handle money.
It does. And knowing how long different things stay there, it can help us, make that story better.
For sure. It's all about like being in control of our credit.
And remember, it's not a sprint, it's a marathon. Good credit takes time and effort.
Well said. You're a credit expert. Was there anything in all this research that, surprised you?
One thing that caught my eye was in Bankrate's article, the one about, when debt comes off your report. They said that even if a debt falls off, you might still have to pay it.
Hold on. So even if it's not on my credit report anymore, I might still owe it.
It's possible, yeah. It depends on the statute of limitations, which is different depending on where you live and what kind of debt it is. Basically, credit reporting and debt collection, they're two different things. Just because a debt's off your report doesn't mean it's gone.
Wow, that's good to know. It seems like there's always more to learn about this credit stuff.
Definitely. It's always changing with
Yeah.
new laws and, scoring models and everything.
So we got to stay informed. But going through all these articles and legal stuff can be a lot.
It can be. That's why we do this, to break it down and make it, easier to understand.
Yeah, I think we've done a good job of that.
I think so, too. We've covered a lot, from how long things stay on your report to, inquiries and credit utilization.
And those closed accounts in good standing, helping us out. That was
Yeah.
a big takeaway for me.
Yeah, it shows that good credit is a long game. And doing the right things, it really pays off.
Totally. What about people just starting with credit? Any tips for them?
That's a great question. Actually, Experian talks about that in their article, the one about how long things stay on your report. They have a whole section for people who are new to credit or trying to rebuild.
Perfect. Let's hear it.
They say the most important thing is to start with a secured credit card.
Those are the ones where you, put down a deposit, right?
Exactly. It's a good way to show you're responsible even if you don't have a long credit history.
So it's like training wheels for credit.
Exactly. You use the card responsibly, pay on time, keep your balance low, and it builds a good record on your credit report.
And then after a while, you can get a regular credit card.
Right. It's step by step. Secured cards are a good way to start if you're new.
So if you're just starting with credit, don't be afraid. Start small, be consistent, and you'll be on your way to a good financial future.
Couldn't have said it better myself.
Now, before we finish, let's go back to something we talked about earlier. Checking your credit report.
Absolutely. It's really important for managing your credit.
All our sources agree on this. TransUnion, Equifax, Experian, Bankrate, the CFPB, it's not just about finding mistakes, it's about knowing what's there and how it affects your score.
Yeah, it's about being in control of your financial story.
And remember, you can get a free credit report from each of the big three, Equifax, Experian, and TransUnion, once a year.
That's right. You can get them at www.annualcreditreport.com. It's a great resource.
Bookmark it, set a reminder, whatever it takes. Check those reports. It's the best way to catch any problems early.
And remember, the more you know about credit, the better. The more you know, the easier it is to have good credit.
Well said. Before we move on to our final thoughts, anything else from the research that stood out to you?
You know, one thing that really stuck with me was they talked about how good credit habits can help even if you have negative information.
So even if you've made some mistakes, doing the right things now can help balance it out.
Exactly. It's like building a strong foundation. Even if there's a crack, the house can still stand if the foundation's good.
I like that. It's encouraging. No matter what your credit's like now, you can always improve it.
Absolutely. It's never too late to start making positive changes. And knowledge is a powerful tool.
Totally agree. To all our listeners, take this information, use it, and watch your credit improve.
It's like we've given you the map to the credit treasure. Now go find it.
Okay, maybe not treasure, but definitely a good financial future.
Exactly. And remember, we're here to help. Keep learning, keep asking questions.
Wow, it's incredible, isn't it? How much these credit reports actually tell us about ourselves, like a financial mirror reflecting all our money moves.
It's true. And the thing is, once we know how long different things stay on there, well, we can make better choices, for a brighter financial future.
It's almost like having a strategy, right? Using this knowledge to kind of shape our own credit story.
Exactly. It's not just about dodging the negative marks. It's about actively building those good ones. Remember those closed accounts in good standing? They're like little champions, vouching for us to future lenders.
I never thought of it like that. Like they're building our reputation over time. So if you had to boil all this down, for our listeners, what's the one big takeaway?
I'd say your credit report. It's not just a bunch of numbers. It's a story, your financial journey. And those choices, they have a ripple effect. Way beyond loans or credit cards.
It's about opportunities, right? Renting an apartment, getting the best rates, maybe even that dream job.
You got it. It's a powerful reminder that good credit, well, it's an investment in ourselves, in our future.
Absolutely. So as we wrap up this deep dive, let's turn to you, the listener. Knowing all this, what's one thing you can do starting today to make a positive impact on your credit? Big or small, the important thing is to start taking control.
And remember, even a tiny step forward can make a huge difference in the long run.
That's it for this episode of The Deep Dive. We hope you've enjoyed this journey into the world of credit reports. It might not be the most exciting topic, but understanding it can be truly empowering.
Until next time, keep diving deeper, keep learning, and keep building that bright financial future.
And that's a wrap. Thanks for joining us on The Deep Dive. We'll catch you next time.
And that wraps up another insightful episode of the Deep Dive Credit Podcast, brought to you by Elite Credit Solutions, your go-to resource for affordable credit repair across the United States. We appreciate you joining us today, and we hope you found the information valuable and empowering. If you're ready to take control of your financial future, don't hesitate to reach out to us at 813-317-6776. Thank you for listening. And until next time, keep striving for excellence in your credit journey.